Joining us now is Yale law professor, Washington Post contributing columnist, and former counselor to Treasury Secretary Janet Yellen, Natasha Sarin. Natasha, welcome. Glad to have you here. You heard the president say China's economy is collapsing. What is your reaction to that, and whether China or the U.S. would be the first to blink in the tariff war?
So I think the situation that's really quite important to understand is when it comes to a trade war, there really are no winners to be had. We're in a situation where it's definitely the case that the Chinese economy is struggling as a result of the United States launching this sort of unilateral trade war against them with tariff rates higher than we've seen in a century. But we're also in a case where the United States is suffering as a result of the exact same trade war. You're going to see American consumers pay prices that are about $4,800 higher this year than they did last year. And that's not just on strollers, and that's not just on pencils. That is on everything that they buy. The economy will be smaller and demand will be less. And that's a result of these actions.
I want to play for you, Natasha, another piece of President Trump's interview with Meet the Press. This one's on whose economy we're in right now. Take a listen.
When does it become the Trump economy?
It partially is right now, and I really mean this. I think the good parts are the Trump economy, and the bad parts are the Biden economy, because he's done a terrible job. He did a terrible job on everything.
So Trump went on to say, quote, ultimately, I take responsibility for everything. That's an unquote there. How much of what we see is the Biden economy, and how long can Trump keep dividing the responsibility?
So I don't actually think it makes sense to take too much from any one particular piece of data or any one particular input. Last week, we learned that GDP growth was slowed over the course of the first quarter of this year. But on the other hand, we had a very strong jobs print. And so what I think we should take away over the course of these first few months of the Trump administration ultimately is that the president inherited a very strong economy. The reality is we still had a way to go with respect to inflation in that very particular last mile, but investment was strong in this country and the labor market was strong in this country. And those things could still be true. The reason why we're starting to see this type of these tremors in the market, and the reason why you're starting to see investors be nervous about investing in the United States and be nervous about the dollar, that's because of the nature of this one-sided trade war that we've launched, and the fact that we're talking about tariff rates higher than we've seen in a century, and the fact that there is so much uncertainty. We don't know what tariffs are going to be in place, a year from now. We don't even know what tariffs are going to be in place 2 weeks from now. And that makes it incredibly difficult for businesses to plan.
Yeah. Trump also renewed his call for the Federal Reserve to lower interest rates, and Treasury Secretary Scott Bessent echoed that call. Is Fed Chair Jerome Powell seeing the same thing as the Trump administration?
So I think something to bear in mind that all of this makes me quite nervous about is it is incredibly important for the executive branch, the president, the members of his cabinet, to respect the importance of central bank independence. It is sort of a pillar on which this economy is built. It's why when you heard the president start to say, should Jay Powell serve out the rest of the term, you had markets really react very negatively to that type of statement. The Federal Reserve needs the space to be able to react to the economy and its dual mandate of preserving employment and making to keep sure that inflation stays low. What Chair Powell has already said about the nature of what the Federal Reserve is likely to do in the months ahead is that it has to wait and see and watch as it sees the economy evolve. But also he said that this type of uncertainty that we're living through, with the nature of the tariff policy being, as I said, one thing one week and another thing the next week, makes it incredibly challenging to try to understand what the trajectory of the economy is going to be and ultimately how the Fed is going to have to be able to react.
Do you expect movement on interest rates this week?
So I expect that over the course of, and I should say, the Yale Budget Lab, which I run, has done a bunch of estimating with respect to the nature of this particular trade war and also what its consequences are likely to be. And we predict that GDP is going to be lower, and we predict that the economy is going to be smaller. Ultimately, we expect that the Federal Reserve will have to react to the fact that you're going to see these types of negative consequences for the economy. But Alex, to predict when they're going to do it or how likely they are to do it at this meeting is something that I think is a mistake for me to at least attempt.
Yeah, it's a fool's errand by most accounts. So the president addressed potential supply shortages in his comments over fewer dolls for children. Here's part of that.
When you say they could have $3 instead of $30, are you saying Americans could see empty store shelves?
No, I'm not saying that. I'm just saying they don't need to have $30. They can have 3. They don't need to have 250 pencils. They can have 5.
But you're basically saying there could be some supply shortages because of the tariffs.
We don't have to waste money on a trade deficit with China for things we don't need.
So Trump said he didn't have an estimate for how long this, quote, transition period would be. Do you have an idea how long until we start seeing empty shelves?
No, I think that the sort of a few things to bear in mind here. One is that you are already starting to see the consequences of this trade war. We know that sort of the ports are seeing less activity. Ships are coming to the United States empty. We know that many small toy manufacturers are telling the president that the reality is it's unclear if they're going to be able to stock their shelves this Christmas because of this trade war. We know that in the U.S. it's become harder already to be able to get access to certain types of products that are made in China because the Chinese simply aren't shipping them now that the de minimis exemption has been removed. So we're in a situation where we are already starting to see the reverberations of this trade war, and they're only going to grow over time. And, I have 11-month-old twins, and maybe I can find a way to explain to them that this Christmas they can't have their Tonka trucks because they're not on the shelves. But I think that's A, a hard thing to do, and B, the question that we have to ask ourselves is, to what end? And the question the American consumers are going to ask themselves is, what is success here? What are we trying to accomplish? And if it looks like there is an objective that the Trump administration is working toward, it certainly isn't one that's clear to the markets, and it's not one that's clear to me as an economist.
All right. Well, I do hope that the administration doesn't put you in that position this Christmas when you look for holiday toys. Natasha Saran, thank you so much for your time.